meeting on Friday to confirm everything up. We made a very good trade deal, and I hope good for both countries. We have a group of very big companies that want to buy it.
President Trump there celebrating a deal with China to keep TikTok online in the US, but the focus is on who will retain control of the algorithm as we await the fine print. Live from Sydney, I'm Paul Allen, and this is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. Well, the Federal Reserve set to conclude what many see as one of the most extraordinary meetings ever, with Trump's attempts to reshape the central bank in play. Investors are looking for clues on the rate path, some even betting that the Fed will deliver at least one 50 basis point cut this year. Barclays Global Chairman of Research, Ajay Rajadhyaksha, is going to be joining us with his take on where he sees rates headed and the implications for markets. Also ahead, Indian Prime Minister Narendra Modi turning 75 today, and that is actually his party's unofficial retirement age. We'll discuss why he is successfully fending off any pressure to relinquish power.
And I'm Stephen Engel outside of Hong Kong's Legislative Council, where Chief Executive John Lee will be delivering his annual policy address. It's his blueprint to kind of outline priorities to revive the economy and diversify the economy and also boost livelihoods.
Here's a look at trading across Asian markets. There has been a little bit of a pullback in the Asia-Pacific stocks benchmark after a 9-day rally to a record high. Investors are in a holding pattern as we await that critical Fed rate decision, and there's plenty of intrigue around the FOMC call after close Trump advisor Stephen Moran was confirmed as a Fed governor just in time to join that meeting. Traders are broadly expecting the Fed to cut rates by 25 basis points. Some in the options markets are placing bets for a jumbo half-point cut. The Fed's decision kicks off a key stretch of rate announcements, with the Bank of England and BOJ due up next. All right, well, let's get some insights from someone who expects the dot plot to show 3 25 basis point cuts this year, one in 2026 and one more in 2027. Ajay Rajadhyaksha is Global Chairman of Research at Barclays, joins us from New York. Ajay, thanks as always for your time. I just want to start with the decision in hand. What's it going to be, 25, or are you in that, small but possibly correct minority that thinks we might see 50 basis points?
Oh, that minority is not correct, Paul. It's going to be 25. The Fed absolutely hates completely and totally surprising markets, and there's just been no data since the quiet period started on September 6th to justify a surprise of this magnitude. It is not going to happen. They will go 25. Powell will acknowledge in the press conference that the labor market has shown some signs of softening, but he'll point out that a lot of that is just because labor supply has fallen off a cliff, that inflation is still not anywhere close to 2%. And I think he will emphasize the risk management aspect of these rate cuts. 25 basis points each month for the next 3 meetings. I think that's what they're going to go for.
Yeah, so 25 basis points at each of the next 3 meetings, but there'll be a lot of data between then and now as well. Do you think that in terms of the risk around inflation from tariff feed-through, do you feel that's now receded?
It definitely has receded, and I'll tell you why. Do you remember 4 months ago when Powell said that goods inflation is transitory? He used that word, he got a bunch of flack for it, but he wasn't wrong. Goods inflation is transitory, unless the labor market is so strong that it leads to second round, wage effects where workers walk into their managers' offices saying, look, goods prices are rising, I need a big raise. Now, clearly the labor market has slowed down. So clearly you as the Fed should be less worried about those second round effects. And without that, there really is not a whole lot of reason to fear goods inflation from a macroeconomic standpoint. And I don't think they will. The risks have receded also because at the margin, It's a little bit here, a little bit there, but at the margin, we have not had any major upside surprises to inflation for the last several months. So yes, the risks have definitely gone down.
Ajay, I just want to jump in briefly to get our viewers across some breaking news. We're seeing Baidu shares jumping 14% in Hong Kong on optimism over an in-house chip venture. So the brokerage saying that this is a Arete research, by the way, saying the search engine operator's new in-house chip venture has the potential to more than offset the struggling online advertising business. So the stock rising to levels we haven't seen since towards the end of 2023, Baidu jumping about 14% on that optimism over that new in-house chip venture. Right, Ajay, let's just get back to what we were discussing around the Fed. I mean, you mentioned jobs there. Do you feel also perhaps the jobs market starting to stabilize as well, although recent data has been a little bit on the soft side?
Yeah, but it's only the non-farm numbers that have been soft. Every other indicator, not just in the job market, if I look at, take the job market, right? If I look at jobless claims, for example, both initial and continuing, they are still pretty darn low. The unemployment rate has drifted higher, I'll grant you that, but it is also pretty low from a historical standpoint. If I look at tax receipts, the way they are playing out so far this year, they are healthy. If I look at the equity markets, they keep making new highs. If I look at other activity indicators, there really is no sign that, that the US economy is headed anywhere close to a recession. So yes, the non-farm payroll numbers have slowed, but this is a healthy economy. That's what markets are picking up on, and I think rightly so.
Well, if it's a healthy economy, why does it need cheaper money? I mean, normally you'd start cutting rates if the economy looked like it needed support, but does this economy look like it needs support?
Because the starting point matters, Paul. And the starting point in the Fed's mind is that they are still restrictive. So in their mind, what they are doing is, they are normalizing. Remember, it wasn't that long ago that a series of rate cuts meant the Fed funds rate going to 1%. Now we are talking about, we are at 4 to 4.25. We are talking about going about 50, 75, 100 basis points lower from there, but still stabilizing around 3, which the Fed believes is long run neutral. That's all in their mind that they are doing. And I don't have a lot of issue with that, which is also why I have a hard time seeing a 50 basis point rate cut this year at any meeting, unless the labor market completely falls out of bed. And I just don't think that's going to happen.
Well, tell us a little bit about your outlook for growth as well. What's your view on GDP in the US?
Right. So quarter on quarter in the second half of this year, the annualized numbers, we have 1.5% growth both in Q3 and Q4. Now, if you look at the Atlanta Fed's GDP tracker, for the third quarter, it is actually tracking well above 3%. Now, that number often gets revised downwards, but we're talking about, reasonable to pretty decent growth for the second half of this year in the context of this massive reordering of global trade. And next year, we think growth picks up to around 2%. And this with not a whole lot of jobs being created. Most of that increase, we think, is going to come from productivity. You mentioned the Baidu numbers. It's not just Baidu. Alibaba has had great earnings. Oracle in the United States briefly made Larry Ellison the world's richest man. The AI theme is alive and kicking, and it's the single biggest macro driver in the global economy right now. And the US and China are at the forefront.
We also, in this environment, have a very weak dollar. This is the weakest, I think, since the Fed began its tightening cycle 3 years ago, weakest against the euro in about 4 years now. If the Fed's about to embark on a series of cuts and the easing cycle is about to get underway in earnest, where's the floor for the dollar?
Well, I'll push back a little bit on that by saying that what is priced into markets in terms of Fed rate cuts, if that is all that the Fed delivers, then the dollar is supposed to already reflect it. Now, a bunch of things have come together. You're absolutely right. Dollar hedging has picked up a lot in 2025. Before that, foreign investors who had dollar assets just let them run unhedged because the dollar seemed to go only in one direction, which was seemingly stronger. Number one. Number two is this administration is clearly pushing for a weaker dollar. So that's played a significant role. Having said that, take a look in your part of the world, right? Japan, for example. The yen has not made a lot of headway against the dollar in the last month or so. So I think the euro is the one standout. And you notice in this equity melt-up poll that we've seen in September, right, with Google up 25%, with the Chinese equity market really taking off, with US equities melting up. The one market that has not participated, not coincidentally, is the market where the currency has had strength, which is obviously the European markets. I don't think the dollar has a lot more to go from here, despite the Fed easing cycle starting, unless the Fed cuts a lot more. If you tell me that the Fed funds rate stabilizes at 2%, I'm just wrong. Then the dollar has a lot more room to go. But absent that, if it stabilizes around 3 to 3.25%, I think that's priced into today's market.
Conversely, do you think maybe we've seen the ceiling for some of these dollar alternatives like gold?
No, I still think, look, there's a few things in common across much of the developed world. First, fiscal profiles are poor. And that's true in the United Kingdom, that's true in France, that's true in Japan, that's true in the US. Number two, in most economies that I mentioned, with the exception of France, inflation is still not at target. I'm not terribly worried about it spiraling away. But the fact remains that it's still well about 2%. Central banks in most of these economies, to your point, are now starting to ease. So this is, and most importantly, in many ways, there seems to be absolutely no political will, not in Japan, not in France, not in the United Kingdom, not in the United States, to fiscally consolidate. That is not a world where gold takes a bath. It probably is going to do okay even from here.
All right, we've got to talk about this. A new addition to the FOMC just in time for this meeting is, of course, Stephen Miron, sworn in just hours before this was due to take place. How much influence do you think he's going to have on this decision that's coming up?
Not very much. He will dissent, of course. It would be very, very hard for him to not dissent, given the context. But I mean, I've known the FOMC for a fairly long period of time, individual members on the FOMC, and it tends to be fiercely protective of its independence. They genuinely, I think, try to check their politics and their ideologies at the door and do what they think is the right thing from an economic standpoint. And right now, they still think that the US as a whole is doing okay, which I think it is. I think they're right about that. So one person is not going to sway them. But look, the point is well taken. What will matter right now in this meeting is you're not going to get a 50 basis point. You're not going to get a surprise on the decision. The press conference might not be much of a surprise either. I think what investors will really look for is what Miran says after, whether there is a dissent, is what Governor Waller comes out and says, and what Governor Bowman, so the three members who are clearly more dovish than the rest, say. And I don't think Waller dissents. I don't think Bowman dissents. I think Miran does. That is expected. But any speeches around that will be very, very closely followed.
It's interesting that point you make about Fed officials getting in the door and then becoming fiercely protective of their independence, because we must remember, of course, Jay Powell is a Trump appointee, and he certainly hasn't been doing the president's bidding to the point where the president insults him on an almost daily basis. Do you think the same thing could happen with Stephen Miron and these other potential appointees by Trump to the Fed board, that once they get inside the door, things change?
I think Governor Miron will dissent. I would be shocked if he doesn't. But let's keep something in mind. The ultimate arbiter, the reason why even the administration doesn't want policy to be much, much cheaper, for policy rates to be much lower than justified by the economics, is because there is a cost to be paid on the other side. There is no free lunch. What you end up getting is much higher inflation eventually. Say, for argument, the Fed was convinced one way or the other to take the Fed funds down to 2% over the next, 6 months or so. Markets would absolutely reflect that. They would reflect that through much higher inflation break-evens in the longer part of the curve. You might start to see the very long end of the bond market spiral out of control. And who does that exactly help? So, there's a reason why economic logic dictates most policy decisions. But even having said that, I think Governor Miran I don't see how he doesn't dissent given what he's publicly said.
Well, in the lead up to his appointment, he was also talking about controlling long-end bond yields, the so-called third mandate. Do you have any concerns about that? Any risks around it?
I would be shocked if that is something on the agenda at this point. And what I think he's implying is basically yield curve control. And yield curve control does not work if the inflation numbers are already above target. That's the main point. Japan's done yield curve control. Japan did it for a long period of time. But remember, Japan was doing it because they were trying to push inflation up. That is very, very different. They were trying to get people to take a lot more risk. In the United States, with equities seemingly making a new record high every second week, gold taking off, Bitcoin taking off, nominal yields in the very long end struggling to rally, except for the last couple of weeks when data has weakened, YCC just doesn't make sense. I don't think the central bank will remotely consider it. And, Governor Miran has mentioned it, yes, but I think it's an idea that will get zero traction with the rest of the FOMC right now.
Yeah, well, we spend a lot of time in the media talking about these sorts of risks and ideas and the risks around Fed independence as well. But if we look at the markets, well, it just seems to be shrugging it all off. I mean, what would the market need to see that would reflect a concern around Fed independence?
First, you're absolutely right. Markets are shrugging it all off. For example, on the day that Governor Cook was fired by the administration, if markets genuinely worried about Fed independence, the one thing you would have seen is inflation break-evens start to go up. And you know what they did on that day? They actually came off slightly. So Fed credibility clearly in the market's mind remains intact. Five-year inflation break-evens, which in my industry is a common way of looking at medium-term inflation expectations, are still implying that core inflation in the U.S. will ultimately return to the 2% target. So yes, there's not a whole lot of concerns about Fed independence. Now, the way that could change is, of course, one, if Chair Powell is actually pushed out, and the courts uphold that pushing out, something that I do not think will come to pass on either front. But number two is, if come February, when the regional presidents are up for, their terms are up for renewal, but if the administration makes the big push to replace a lot of them, then I think markets will start to get a lot more excited. But this is, right now what is happening is just nibbling at the margin. It will not change the overall composition of the FOMC, and it certainly isn't going to push the FOMC to become a lot more dovish a lot more quickly. That ain't happening.
All right, Ajay Rajadhyaksha, Global Chairman of Research at Barclays. Thanks so much for your insights today. You might have seen across the bottom of your screen there the headline that China has lifted its exit ban on Wells Fargo banker amid those talks with the US on trade. Now, just to give you the background of this was relating to a Wells Fargo banker that was involved in a criminal case, according to Chinese law enforcement authorities. However, we've just had the news that China has lifted the exit ban on that Wells Fargo banker, as it just so happens to be discussing trade with the United States. Also, excitement around chips, driving some big gains on those Chinese tech stocks mentioned a moment ago. Baidu surging on excitement around its Kunlun chip venture after an analyst upgrade. We've also got Alibaba gaining on reports that its AI chips have been deployed at a data center in China. Meanwhile, Chinese chipmaker SMIC at a record following a report saying the company is running trials on China's first domestically produced advanced chip-making equipment. Still to come, Hong Kong's economic challenges front and centre as Chief Executive John Lee delivers his annual policy address. We'll be live outside the city's legislature with the latest next. This is Bloomberg. There you see the Hong Kong Chief Executive John Lee giving his policy address. It is his fourth policy address, focused there on economy, livelihoods as well. So far, here's some of the announcements he's made. It says Hong Kong will create land for large development projects and will continue to increase public housing supply. Hong Kong also plans to set up a working group to boost AI development and will speed up the Northern Metropolis project development as well. Our Chief North Asia correspondent Stephen Engel is there. He joins us live from Hong Kong's Legislative Council headquarters now. Steve, any surprises so far in this speech?
Not really surprises. He's ticking all the boxes as promised. He's focusing a lot on people's livelihoods, which was expected. In fact, the theme of this speech, the policy address, it was quite mainland-esque and quite long. I'm not being, derogatory there. It's a reality of Hong Kong's situation. This is the theme: deepening reform, focusing on people's livelihoods, leveraging our strengths, and creating a better future. Quite vague and quite populist, but he's ticking all those boxes right now, talking about, those social issues which are at the heart of Hong Kong people's concerns right now. The economy, yes, picked up in the second quarter, but it's still a long way from full recovery. The housing market has been down for 4 consecutive years. Obviously, there's been some retail pain here, and commercial properties are way down. Non-performing loans are up. The unemployment rate is at a 3-year high. So he does need to address the daily livelihood concerns of corporates and the people. He did talk a lot about the northern metropolis as a keystone project. He's going to fast track that 300 square kilometer stretch of land, which is essentially farmland right now on the border across from Shenzhen, mainland China. He wants to turn that into a multi-sectional area of innovation, and he is going to be mentioning AI quite a bit today. He wants Hong Kong to be an innovator in AI initiatives. They call it AI Plus, and that could likely be housed in the metropolis to the north. There will be not only biotech and AI, but also medical devices and ecotourism, renewable energy sectors. So it's a lot to chew, obviously, for a fairly small economy. But again, they're looking for new drivers of growth as property and the financial sector as an international financial hub, the main pillars. I'm not saying they're weakened, but they need to find new growth drivers in addition to assuring people's livelihoods. If they can't get into finance or their paper wealth on property is down, there needs to be new drivers as well to keep and attract youngsters and a new breed of worker here in Hong Kong.
Is this speech that what we've heard so far likely to satisfy some of the peak industry bodies that we've been hearing from in the lead up to it? I mean, I know the Property Council had some things that they were wanting to see.
Well, yeah, so the Property Industry Body Association is essentially urging the Hong Kong government to come up with about $2.6 billion, 20 billion Hong Kong in the latest recommendation to sort of subsidize the pain that we've seen in the property sector. I'm not so sure there's going to be that kind of welfareism going on with John Lee, with the government running the budget deficit right now. So there will be populist themes, but it won't be necessarily cash handouts to that tune. He might surprise me because the property sector does need a shot in the arm. So what we could see is a further removal of the stamp duty. We saw interest after the last time they reduced the stamp duty. You could also see enhancements in the so-called Property Connect, inviting more mainlanders to come down and buy property in this market, which is already 30% owned by mainland Chinese.
All right, Bloomberg's Chief North Asia correspondent Stephen Engel there, joining us from Hong Kong's Legislative Council headquarters. Coming up, an investor group led by Oracle got a framework deal in place for TikTok's US operations, pending talks on Friday between Presidents Trump and Xi. More on that next. This is Bloomberg. Welcome back. You're watching Insight. Well, Bloomberg's been told that TikTok's US operations are set to be acquired by a consortium that includes Oracle, Andreessen Horowitz and Silver Lake. For more on this, let's get to Bloomberg's tech correspondent, Annabelle Drewlers. So, Belle, can you tell us about the contours of this deal? What's it worth, what's involved, and what are they getting for their money?
Yeah, well, actually a lot's kind of not known so far, really, of the shape that it's going to take, aside from what was already reported actually a few months ago, because we were looking at a point where there was close to finding suitors or finding bidders for TikTok in the US that essentially would allow ByteDance to divest of its operations there, and then it was sort of scuttled by the US slapping tariffs or starting this trade war again with China. So It really, in the time since, actually it kind of looks similar to what it did before in terms of the investor group. I mean, it's Oracle, Andreessen, Horowitz, Silver Lake. These are the ones that are being reported. What we don't know and what's still to be ironed out is exactly which level of stake each company or firm is going to be taking. So Oracle, for instance, we've heard from sources, maybe it's going to end up being a small stake in the business. That's left to be decided. What is important, though, and what we've also heard from sources and what's new is that we understand that ByteDance's stake in the business is going to drop down below that 20% level, possibly. And so that's something that could end up satisfying a 2024 law that was passed in the US that would require ByteDance to, again, sell off its operations there.
Key to the TikTok experience is the algorithm. Who's getting control of that in the US operation?
Yeah, that's also one of the really big sticking points and something that's been a real issue as well for China, because this is prized technology and they're not really wanting to let it go. But what we do understand is that maybe it could end up being licensed by ByteDance. And so, again, the control would ultimately still rest with the parent company in China, but licensed out for a fee. And so that could be something that's enough maybe to appease Beijing, who still needs to sign off on this deal as well. I think it's important to note that this deal, this talks of this deal in Madrid is really what seems to have opened the door for this call between President Trump and Xi on Friday. So it does seem like there's some progress, but again, a lot of issues still to be ironed out, including a new app that's supposed to be launched for the US. What's going to happen with the US employees? How do they communicate with staff back in China? It seems like Oracle could end up still being the cloud service provider for the business, and we saw that sort of reflected in the share price. But enough that President Trump has once again granted an extension on the timeline for this deal to be approved or wrapped up down to December 16 of this year. So a few more weeks, again, to get this more ironed out.
And if it doesn't, I mean, what's the potential here for another extension? And to what extent have the president's security concerns been addressed, or have they just not been addressed?
Again, that's obviously one of the key sticking points. And would this shape of this deal be enough to satisfy US lawmakers that it does sort of remove those national security terms? That is what goes back to ByteDance having a 20% stake or less. And I guess that is sort of the goal, that is enough to satisfy those regulations that were enacted in 2024. If we don't get this deal being signed, I guess there's always that possibility of a further extension. We're talking now around 4. So pushing this down the can, kicking the can down the road even further is of course always a possibility. But the other possibility is that the app ends up going dark in the US, which is what's always been threatened by President Trump, who still continues to underscore, though, how important it is as a part of youth culture within the States as well.
All right, Bloomberg's tech reporter Annabelle Drull is there. Well, joining us now for more on this, Anupam Chander, Professor of Law and Technology at Georgetown University Law Center. Anupam, thanks so much for joining us today. And I do want to pick up on what is really core to the whole TikTok experience. As we mentioned, the algorithm there. You expect it's just going to be licensed from ByteDance to the new US-owned entity. Do you think there are any risks, or do you have any concerns around the algorithm being used to shape the content and the experience that US users have under that framework?
So the new proposal, it seems to have the algorithm still owned by ByteDance and licensed to TikTok US, as you said. But ultimately, the control really is by the company that runs the algorithm in the United States. That company would control the algorithm in the sense that it could push what it wanted on its app. So even though the algorithm might have been designed by Chinese engineers in China, ultimately the app will do the bidding of the company that's deploying the app. That is, if an American controller of the app says, show more of this particular category of stuff, say more Taylor Swift because she's going on tour, then I think it would do that. So I think it does affect the concerns. It does seriously reduce the concerns that TikTok becomes a propaganda machine. at least a foreign propaganda machine. The people who control the app, just like editors anywhere, can push their own agenda.
Yeah, there's a tremendous amount of speculation ahead of this as to the contours of this deal. I mean, I'll just give you the words of a spokesperson for the House Select Committee on China saying, and I quote, "This isn't going to be compliant if the algorithm is Chinese. But if we have a scenario that you're describing, the algorithm remains Chinese owned but controlled by the US, is that enough to get around this problem?"
So Congress didn't write a way in the law for it to second guess the president's determination as to whether or not there's been an effective divestiture. So the law doesn't, the law entrusts the power to declare an effective divestiture with the president of the United States. So it doesn't have a mechanism to challenge the president's determination by, for example, members of Congress who might think, oh no, they haven't actually followed the letter of the law. The letter of the law says there could be no further operational relationship with ByteDance and this TikTok US. And of course, the licensing of the app would seem to be an operational relationship between the two. But the problem is that if you don't have licensing of the app, then ByteDance will likely not get approval to allow TikTok US to be hived off into a separate company run by Americans. So it's a question whether or not anyone in Congress really feels like they want the app to be shut down. When they passed the law in 2024, Congress insisted that the TikTok would not be shut down in the United States. They were not banning the app. So it would be a reversal for them to now insist that they in fact did mean to ban the app.
We talk a lot about how special the TikTok algorithm is. I'm just wondering if you can give us a little bit of context around that. I mean, it's described as being famously addictive, but, you know, the algorithms of its US peers and competitors are also famously addictive. Are we just sort of comparing fentanyl and heroin here?
Sure. So both, YouTube's feed, TikTok's feed, Twitter or X's feed are designed to keep their users scrolling. And TikTok is very good at that. TikTok decided that, hey, you aren't actually that interested in what your friends are interested in. You're actually interested in what you're interested in. And so if you're interested in, Westerns, we're going to give you a lot of Westerns, even if your friends aren't interested in Westerns. If you're interested in, fashion, we'll give you a lot of fashion. So TikTok is trying to very cleverly target things that you might be interested in. And anyone who's used TikTok knows that your time can be whiled away very quickly on TikTok. It is a boredom fighter if you want to use it. And of course, in that sense, it's an addictive. It has addictive qualities in that sense. And so, like all these social media apps, is designed to keep you entertained.
No, it wasn't that long ago. It was during President Trump's first term that the president described TikTok as a national security risk. I mean, has anything changed here apart from the president's opinion of TikTok?
Well, the president started using TikTok in 2024, and he found it extremely helpful in reaching fans across the country. So he credits TikTok. He says he has a warm spot in his heart for TikTok. He credits TikTok for helping him win the election. Joe Biden joined the app, Kamala Harris joined the app, Donald Trump joined the app, and so all of them realized that it has tremendous potential to promote their ideas. And so this is something that any politician in the United States needs to be on in order to reach half of American users who are on this app.
So there's a degree of political expediency here. Can you give us the straight down the line view? Does TikTok represent a security risk?
So I think that there's, one thing we haven't seen is a lot of Americans deciding, hey, I don't want to use this app anymore because of the security risk. Some Americans have decided they aren't going to use the app. because of the possible Chinese association. But many Americans, even after becoming fully aware of the Chinese association of the app, say, nothing that I'm doing presents a national security threat. And I think for most of us, the answer is that there is, we're not really future spies for China. We don't hold any national security secrets. We're not subject to blackmail. So in all those circumstances, for most of us, it's not necessarily a national security threat. But for certain people, certain categories of people, using these kinds of social media apps or any social media app might be dangerous. And even for their family members to use it might reveal secrets that should be kept hidden, national security secrets. So I think it's really a question of degree. And one other important feature is that we haven't seen countries across the world adopt TikTok bans for national security reasons. We've seen them adopt TikTok bans because they don't like what's on TikTok, because of, maybe it's got the kind of cultural content that they don't like. But we haven't seen European nations, even Taiwan, ban TikTok, even though obviously Taiwan's relationship with the Chinese mainland government is fraught.
Well, in this case, the argument is that if it's a US-owned, the data stays within the US. But of course, if you're interacting online with somebody in another country, data doesn't really respect global borders, does it?
Exactly. So TikTok US will need to continue talking with TikTok Global so that we Americans are not left just talking to ourselves. So I need to be able to comment on someone else's TikTok elsewhere, a Canadian TikTok user or an Australian TikTok user. I'd like to be able to comment on them. I'd like to be able to see their videos, and they would like to see mine and be able to comment on mine. So there is inevitably an exchange of information, at least in free societies, that have to allow information to cross borders. We can't hermetically seal ourselves, afraid that information flowing out of our country will threaten us. This is one of the vulnerabilities of being a free society. Information flows all the time in all directions. And I think that is one of the characteristics of living in a free society.
You are, of course, a professor of law, so I do want to finish with a legal question. Are there any questions around the legality of the multiple postponements of this ban that we've seen? By my count, there's been 4 now. And even if there is a question of law, it doesn't matter with President Trump.
First of all, I don't think we're done with postponements. I think there'll be more to come because separating out these two companies is going to be a massive undertaking, and it's likely to take longer than the 3 months now allowed. So I think we'll see more, more deferrals of the law. There's been a lot of question as to whether or not President Trump has been duly enforcing the law, duly caring for the law as he is obligated to do. But I think you haven't seen real protest in Congress. You've seen occasional protest, but really no one wants to be shutting down this app because it will not be to the benefit of the party that shuts down the app, because many American users really rely upon this app. Many American businesses rely on the app. It's a great way to sell your products, to tell people who you are, to bring people into your store. I was at a conference this week where people were talking about how valuable the TikTok Pixel was, the way that they can track customers using TikTok. And so for many Americans, this has been a vital app. And I think Congress doesn't really, truly want to shut it down, which is why essentially they've given Trump a lot of rope to keep on extending TikTok's lifeline in the United States.
All right, great conversation. Thanks so much for joining us. Anupam Chander, Professor of Law and Technology at Georgetown University Law Center. All right, let's get to this. The 20-year bond auction in Japan. There was a lot of nervousness ahead of this. Not to worry, saw the strongest demand since 2020. Higher yields luring investors despite all this domestic political uncertainty. The average bid-to-cover ratio, 4.0. The last auction of the 20-year saw 3.09. The 12-month average, 3.2. So that bid-to-cover ratio, very strong. The leadership change in Japan did cloud the outlook, though, for what's next for the BOJ. We do, of course, have a decision at the end of this week, but very strong demand for that 20-year bond auction. Nothing to worry about after all that nervous build-up. We've got the yen right now, 146.49. Still to come, Indian Prime Minister Narendra Modi. Happy birthday, 75 years old. It's a milestone, though, that's also raising some questions about how long he plans to stay in power. We'll have more on that next. This is Bloomberg. Welcome back. You're watching Insight. Let's check in on how Indian markets are tracking. We have had some promising news in terms of US-India trade relations. Presidents Trump and Prime Minister Modi having a conversation, working to ease that tension over tariffs as well, particularly around India's purchases of Russian oil. So trade negotiations are underway. President Trump even had some kind words for Narendra Modi, wishing him a happy birthday, 75 years old, and thanking him for initiatives towards the peaceful resolution of the Ukraine conflict. So there you have the congratulatory message on Truth Social from President Trump. And we've got Indian stocks looking a little bit stronger at the open, although probably nothing to do with the birthday greetings. And President Trump says he has also spoken to Indian Prime Minister Narendra Modi. Now, this is a move that could ease tensions between those two major economies. Also in a social media post, Trump saying he had a wonderful call with Modi, complimented him on doing a tremendous job, thanked him for that support in helping end the war in Ukraine. And Narendra Modi did respond on Twitter, or X, saying he was committed to supporting the India-US relationship. He also says he supports Trump's initiatives for a peaceful resolution to the Ukraine conflict. All right, the reason why Trump called Modi in the first place was because the Indian Prime Minister turned 75, celebrating his birthday today. And that's also the unofficial retirement age for his party, the BJP. Despite speculation over Modi's political future and succession plans, however, his grip on power appears strong as ever. So for more on this, let's get to government reporter Suji Ranjan Sen in New Delhi. So Sudi, Modi doesn't look like he's anywhere close to retiring. Suggests maybe there's a bit of wiggle room in this unofficial retirement age at the BJP.
Not only is there a little bit of a wiggle room, I mean, the question of his successor or the question of him stepping down doesn't seem to be in the horizon at all. On the contrary, if you look at, following the last federal elections, which was last year in 2024, June, there were questions about, how he's going to manage, because that's the first time he didn't get a full majority and he had to go into a coalition government. But a year on from there, Prime Minister Modi is strong as ever, fully in control. His grip over the party, his grip over the government is the strongest ever. So these questions literally are idle talk, as my colleagues and we have reported earlier today. Paul.
Well, at some stage, the era of Narendra Modi will end, if not anytime soon. So with that in mind, are there any successes on the horizon at all?
Officially, if you ask the BJP or the ideological fountainhead, the Rashtriya Swayamsevak Sangh, the answer that you get is none. And in fact, people who we have spoken to say that even these discussions even haven't happened internally, clearly giving Prime Minister Narendra Modi a free hand to decide when, where, and how he wants to hand the baton over. So that is where the position is. But politics being politics, in South Asia is quite, vibrant. So there are these discussions about who after Modi, who is his chosen successor. But as of now, it all seems to be idle talk.
You mentioned the RSS there, the ideological touchstone for the BJP. How serious or trivial are these reports about an apparent rift between the RSS and Modi?
Well, there is some truth to it in the sense that it is very clear that the BJP, which claims to be the largest political party in the world, and the RSS, which is 100 years old now, there seems to be some amount of friction. How deep that friction is and how that friction plays out, whether there is enough incentive for either the BJP and Prime Minister Modi to completely disregard the RSS or the other way around is the question. From our reporting, it shows that there is none as of now, and the primary reason being that neither wants political instability, which would help the opposition. Mind you, the opposition for the last 10 or more 11 years now have been trying in vain to increase its seats, get more leverage, but hasn't been able to do much.
All right, government reporter Sudhi Ranjan Sen there on Narendra Modi's 75th birthday, among other things, and the future of the leadership of the BJP. Well, a group of House Republicans has urged President Trump to secure a commitment from the United Kingdom to drop its tax on tech companies as he arrives for a state visit. Bloomberg's Lizzie Burton has more on Trump's agenda for the trip, which comes at a very difficult time for the UK Prime Minister Keir Starmer.
Welcome to Windsor, the 11th century fortress behind me. Not the usual venue for a state visit, that's Buckingham Palace. But this isn't President Donald Trump's first state visit. Indeed, it's an unprecedented second here in the UK. And there's much on the table. We're told to expect $10 billion worth of economic partnerships. We're going to see the president flanked by the bosses of OpenAI and Nvidia. But this visit could not be coming at a worse time for UK Prime Minister Keir Starmer. He's had 3 forced departures from his government in just the past 2 weeks, not least the UK's ambassador to Washington, Peter Mandelson, over his ties to Jeffrey Epstein, the disgraced, deceased financier. Indeed, Epstein is the tie that binds not just Starmer via Mandelson, the King via Prince Andrew, but also the US President himself. So there could be some painful small talk. But above all, as Britain plays its ace in deploying King Charles III himself, it is crucial that Keir Starmer wins something substantive here from Washington. Lizzie Burden, Bloomberg News, Windsor.
We are still keeping an eye on the big gains that we're seeing in Chinese tech stocks. Baidu's surging on excitement around its Kunlun chip venture after an analyst upgrade. Alibaba also gaining on reports that its AI chips have been deployed at a data center in China. And SMIC is at a record following a report saying the company is running trials on China's first domestically produced advanced chip-making equipment. That's it for Insight. Horizons Middle East and Africa next.